Okay, so in this video I'm going to show you guys a better way to trade gold. So let me open up the charts and let me show you guys everything. Now if you go on TradingView, you won't see gold within the forex section, only if you go to the commodities section. So I want you guys to have that in mind. Gold is not a forex pair, but is a commodity. Now the way I want to explain this is in two phases. Now the first one is the fundamental phase and the second one is the technical phase. Now in both of this explanation, I'm going to be sharing you guys a secret of how you can know where the market is about to go in that point in time. When banks brought out money, they brought out the money in backing of gold. That was how they were able to convince people of back then to start accepting bank issued notes. Now even till this day, gold is a precious metal and still has a lot of value. To get 1 kilogram of gold, which is 1,000 grams of gold, it's $1,979.57. so as the market move up, as the market go down, this is going to be the current price of gold. Now even to this day, some people believe in protecting their resources through gold. Now let me give you guys this secret that you won't hear anywhere else. Whenever there is chaos in the society, the price of gold goes up, and whenever everything is in normal sense, the price of gold maybe stagnates or might even come down. Now let me show you guys a good proof of that. Now let me use this scenario that happened. Remember the case of COVID-19 coronavirus? Now from what we could see right here, the COVID-19 started in December 31st of 2019. So this is just like the ending of 2019 and before it was like declared on WHO, World Health Organization. Now this right here is the 31st of December when the coronavirus was, reported to the WHO. Now let's look at how price moved within, 2018, 2017. This is 2017. This is 2018, so we could basically see a consolidation within 2017-2018. Now this right here is December of 2019. Now you could see the heat run of gold in this period. Now this was the heat of the corona period when we're having lockdown, no going out, social distancing and everything. We could see the price of gold when all those things was happening, like gold started moving, was just skyrocketing up until a period where everything got normal. It peaked and it started doing the usual consolidation type thing that it does. So basically this right here, I'm telling you, is it. Gold moves mostly whenever there is a problem in the society. Now that's basically for the fundamental power of gold. Now we're going to take a deep dive into the technical power of gold, which is when to place buy, when to place sell on the charts. Now for the technical part of this, I'm going to give you guys a universal strategy that you can use to trade gold. You have to select the time frame you want to trade gold. Now what you want to do right here is that you want to add in the volumes indicator. Now the volumes indicator will not always be there. Now once you've already added in the volumes indicator, what you can do is to change your phone into landscape mode. Now once you've done this, you want to take a good look at the volumes indicator. Now this I'm about to show you right now should be one of the first things you should do before trading gold. Now look at the volumes indicator. Now what the volumes indicator does is that it shows you when there is a lot of volume in the market. Now whenever you see like a very low spot in the volume section, it means that the market is not having any volume. And whenever you see like this top part when it get high, it's trying to show you there's a lot of volume in the market. Now once you've already done that, what you have to find is the average volume. So let's say we get our tool right here and find like the average volume where it's considered normal. As you can see right here, we can see like a very average volume. Now once you've already found the average volume, you want to make sure that price is either close to the average volume or higher than the average volume. Now whenever I see price lower than the average volume, what this is trying to tell you is to not trade, that the market is not volatile, nothing will happen within those periods. If price is not up to your average volume, you'll experience consolidation in the market and the market won't be moving. Now if you see from this 5-minute time frame, you can see exactly what I'm saying. Now once you've already found that out, you can just go to this F button right here and delete the volumes indicator, because we don't want too much to be going on the chart. We want to look at the most important things at the right time on the chart. Now what we're going to do right here is that we're going to add in another indicator. Now this indicator is going to be on our chart. It's not going to be like the volumes indicator where we just use it and we drop it. So what you want to do right here is add in the stochastic. Now the key percent period should be 10, the percent D period should be 6, the slowing should be 6, price field should be slowing slash low slash high, The method should be simple. Level should be 20 and 80. Once you've already got all the settings in, just go ahead and hit done. Now, in case you don't know what the stochastic is used for, it's used to find out overbought and oversold. Now remember, gold is a commodity. Now let me explain this. Overbought is a case where, you know, price has already gone up that it can't continue to go up further. So this 80 mark is used to represent that overbought zone. Now oversold zone is the point where the market has gone down that it can't continue to go down further. Now I know I chose stochastic instead of the RSI. Now the RSI is a lot more slower indicator to show you that those overbought, oversold zone, but the stochastic is very fast. It just puts out those points, marks it up, overbought, oversold, and something like that. But the relative strength index, it does show it, or is a little bit more on the long term part. Now this right here is a point where the market just went up like crazy. Now if you look at the stochastic was able to point that out, that price is at its overbought zone. Now when price is at the overbought zone, you should know that any moment from now the market could just come down. Now it got marked again. This point right here shows us that price is at oversold zone. Now when we see price at oversold zone, we know that the market could go up at any time, and we could see exactly the same thing, telling us those overbought and oversold zone. Now like I said, gold is a volatile pair. It could just consolidate for a period and just start spiking up for a period. Now once you've already added this in, what I want you to do is that you want to add in the moving averages. Now we're going to be working with two moving averages. We're going to work with the 9 moving average. That's going to be the first one we're going to use right here. So that's the first one that we actually have on here. That is blue. Now the second moving average we're going to have on here is the 25 moving average. So what you have to do is come to this point that says moving average, and what you got to do is type in 25. Now you can go ahead and change the color of the moving average to red. Once you set everything, you can go ahead and hit done. Now on the charts right here, we have the 9 moving average, the 25 moving average, and the stochastic. Now I'm going to show you guys how you can use both these things to give you your next entry and exit in the market. Now one thing I want you guys to know is that these two moving averages you're seeing here have two completely different work. Now the work of the 9 moving average is to show you that the trend of the market is intact, and the work of the 25 moving average is to show you that the market is in a trend. What this means in sense of the market is whenever you see price above the 25 moving average, it means that the market is in an uptrend. But if price is below the 9 moving average, it does not necessarily mean that the market is in a downtrend. It's just that the trend is not active at that point, or there is a retracement going on in the market. Now let's look at this point right here. Price went above the 25 moving average. Now price went above the 25 moving average and the 9 moving average. Now we can see right here the market went up. This is actually a very good point to take a buy. So we can take a buy to this point right here, and when we see that price is going below the 9 moving average, we can go ahead and close the trade, because once price is below the 9 moving average, it means that that trend is not active, or the market is in a retracement at that point in time. Now all we gotta do whenever price is below the 9 moving average, we want to see how price reacts to the 25 moving average. Now from this scenario here, we can see that the 25 moving average was able to hold price. That's why the market was continuing to go up. So we can see right here, and there was a little break, but price still respected the influence of the 25 moving average. Still the same thing right here. Price went above the 9 moving average. We take a buy, we hold the buy. So when we see price go below the 9 moving average, we can see right here, price went below the moving average, we can go ahead and close our trade here. So this point right here is a little period where the trend is not active. So you can go ahead and close your trade there and see how the market reacts. Now how are we going to be able to use the moving average together with the stochastic? Now any point that we see that the market is at the overbought zone, all we gotta do is to be conscious of that area in the market. So mainly by seeing couple signs of price trying to go down, price going below the 9 moving average, price trying to cross below the 25 moving average, we know that the trend is about to completely change. So this is exactly what happened here. Now we can see price above the 80 moving average. It gives us that first signal that price is going below the 9 moving average. From here you can go ahead and close your trade and wait to see what happens in the market furthermore. Now we can see right here the 25 moving average held it pretty well though, but you can see we are still at the 80 mark. So you just want to be careful. You don't want to place any trade at that point in time. You want to watch how the market reacts. Now we can see at this point right here, the market came back to retest this point. You see exactly what happened. Price below the 9 moving average, price below the 25 moving average, it goes ahead and go down. Now if you're in the other side of the market and you didn't notice when this uptrend was taking place, you can now use this position right now to take in a sell in the market. And now while this is still very good, it's not yet perfect to how I would like it. Now this what I just showed you is a little bit of the strategy that I personally use. Now I've simply laid everything down in malvinmgt.com. Now I know the different struggles that we have as a trader, from knowing when it's to buy or sell a particular currency, from closing your trades too early to find out that price still hits your take profit that you would have held anyway. So I lay down everything that you need as a trader on here. Now I'm talking from my full complete strategy that you never find me talking about on YouTube, weekly live sessions in preparation of the upcoming week, and so much more. Now there's also a completely free beginner section, so if you're a beginner, this will walk you through all the things you need to know while getting started. Now as for the main course, this is where I'll be breaking everything concerning the chart and where I get to explain my main strategy, and this is something you'll never hear me explain on YouTube. Now the best part of this is that while you learn, you're still earning, because you're going to be automatically added into the signal group. So since it's you guys, I'm gonna give you guys a coupon code that you can use to save some money on. Now what you have to do is that you have to tap on the show order summary, type in the code Malvin, then hit the apply button, and just like that you've been able to save some money. So with that being said, go ahead and click the link in the description of this video. So make sure you go ahead and apply everything that I just said here, and I hope you guys were able to gain value. If you did like this video, definitely hit that like button. If you're not yet subscribed, make sure you hit that subscribe button. And with that being said, I'll see you guys in the next one. Peace out.